Hello and welcome to today's video, where we will be discussing Warren Buffett's latest shareholder letter. In his letter, Warren Buffett expresses his gratitude towards the savers who have invested in Berkshire Hathaway, some for much of their adult life. Buffett notes that the company's shareholders tend to be those who always save and often give their remaining funds to philanthropic causes. Today we will explore the various topics Buffett has covered in his letter, including how he and Charlie Munger allocate investments in Berkshire Hathaway between businesses they control and publicly traded stocks. We will also discuss Berkshire's successful long-term investments in Coca-Cola and American Express, and Buffett's thoughts on the importance of making a few successful investments over time. According to Buffett, Berkshire Hathaway allocates its investments between two forms of ownership: businesses they control and publicly traded stocks. Berkshire Hathaway directs capital allocation and selects CEOs for the businesses they control, emphasizing trust over rules. But they have a zero-tolerance policy for personal misconduct. For publicly traded stocks, they invest based on long-term business performance, not as vehicles for adroit purchases and sales. Buffett admits to making mistakes in investments, resulting in a collection of businesses with varying levels of economic characteristics. The shareholder letter highlights Berkshire Hathaway's successful long-term investments in Coca-Cola and American Express, which have generated significant dividend income and contributed to the company's net worth. These investments have grown steadily over time and are now worth $25 billion and $22 billion respectively, making up around 5% of Berkshire's net worth. The article emphasizes the importance of making a few successful investments over time and the value of starting early. Even if some investments perform poorly, their significance will dwindle as successful investments continue to grow. Berkshire Hathaway had a successful year in 2022, with a record operating earnings of $30.8 billion, which excludes capital gains or losses from equity holdings. Berkshire advises investors to focus on this operational figure, rather than GAAP earnings, which fluctuate wildly and are misleading. Berkshire purchased Allegheny Corporation, a property casualty insurer led by Joe Brandon, which adds special value to the company due to Berkshire's unmatched financial strength. With disciplined underwriting, the increased insurance float of $164 billion has a decent chance of being cost-free over time. And Berkshire's float has increased 8,000-fold since purchasing its first property casualty insurer in 1967. In the shareholder letter, Warren Buffett reflects on his 58 years of managing Berkshire and admits that most of his capital allocation decisions have been average at best. He also acknowledges that some of his bad decisions have been rescued by luck, such as their escapes from near disasters at US Air and Salomon. However, he attributes their satisfactory results to about a dozen truly good decisions made over the years, which averages out to about one every 5 years. He also notes that long-term investors like Berkshire have an advantage that is sometimes forgotten. According to Buffett, Berkshire Hathaway's success is due to a combination of factors, including continuous savings, the power of compounding, avoiding major mistakes, and benefiting from the American economy. According to Warren Buffett, during the decade ending in 2021, the United States Treasury received about $30.3 trillion in taxes, while it spent $43.9 trillion. Berkshire's contribution to the Treasury through the corporate income tax was $32 billion during the decade, which is almost exactly 0.1% of all money that the Treasury collected. Despite this impressive contribution, Buffett acknowledges that the U.S. government faces significant financial challenges, including the growing national debt, rising healthcare costs, and the need for continued investment in infrastructure and education. He suggests that policymakers focus on reducing healthcare costs and increasing revenue through tax reform, rather than reducing spending on essential programs. Buffett also notes that Berkshire Hathaway has a responsibility to pay its fair share of taxes, and that he supports efforts to increase corporate tax rates to ensure that all companies contribute their fair share. Buffett concludes his shareholder letter with a reflection on his own mortality and the importance of succession planning. He notes that he and Charlie Munger have developed a strong team of executives to manage Berkshire Hathaway's operations and investments after they are no longer able to do so. He emphasizes that the future of the company depends on the next generation of leaders, and that he is confident that they will continue to build on the company's success. Overall, Buffett's shareholder letter highlights the importance of long-term investing, prudent capital allocation, and responsible corporate citizenship. He emphasizes the need for companies to focus on creating value for shareholders and society rather than engaging in short-term speculation and financial engineering. Buffett's approach to investing and business management has earned him a reputation as one of the most successful and respected investors of all time, and his insights are valuable for anyone interested in investing or business strategy.